Welcome back to AlgoBot, where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host here at AlgoBot, and in today's video we're examining an expert advisor called Engulfing Pivot Reversal. This is a pure price action strategy. It uses no traditional indicators at all. Instead, it builds every decision from classic floor pivot levels and the engulfing candlestick pattern, with a built-in hedging mechanic for when a level gives way. By the end of this video, you'll understand exactly how it reads the chart, when it signals an entry, and how it manages its trades. Let's get started. So what does the engulfing pivot reversal actually do? At its heart, this expert advisor watches the floor pivot grid, the same reference levels that many intraday desks plot on their screens every session. From the most recent closed bars, it calculates a central pivot, called PP, along with the first support and resistance levels, S1 and R1, and the wider second levels, S2 and R2. Together, these form a price map that the strategy trades around. The signal itself comes from an engulfing candlestick pattern forming right at one of those levels. When price dips into the first support, and the next candle fully engulfs the previous one before closing back above support, the strategy reads that as a reversal taking shape and signals along. The mirror image happens at the first resistance for a short. Because trading against a level carries a clear failure mode, sometimes a level simply gives way and price keeps going. This expert advisor includes a distinctive hedging mechanic. If the level it faded is convincingly broken, the strategy opens an opposite breakout position that moves with the new direction toward the next pivot, helping to offset the original position rather than simply absorbing the loss. This approach is designed for liquid, range-respecting markets. Foreign exchange majors such as Euro versus US dollar or Australian dollar versus US dollar, and gold against the dollar, typically on the 15-minute, 30-minute, or 1-hour time frames, where pivot reversals and false breaks tend to alternate. It's best suited to traders who are curious about structured price action systems and rule-based trade management. As always, this is educational information only, not financial advice, and trading carries real risk, including the risk of loss. Let's walk through the mechanics step by step. Everything begins on each freshly closed bar. The expert advisor looks back over a number of closed bars set by the PivotLookback parameter, which defaults to 20. Across that window, it finds the highest high, the lowest low, and the most recent close. From those three numbers, it calculates the floor pivots. The central pivot PP is the average of the high, low, and close. R1 and S1 are the first resistance and support, and R2 and S2 are the wider levels. The distance between R1 and S1, the pivot range, is then used to size every buffer in the system, so the strategy scales to any symbol or time frame without hard-coding pip values. Now the entries. For a long, three conditions must line up on the just closed candle. First, its low must dip into the support zone around S1, within a tolerance set by the ZoneFrac parameter. Second, that candle must be a bullish engulfing, the previous candle bearish, the current candle bullish, and the current body completely engulfing the prior body. Third, the candle must close back above support. When all three agree, the strategy signals a buy, and its take profit aims at the central pivot PP as a mean reversion target. The short side is the exact mirror. Price pokes into resistance at R1, a bearish engulfing forms. The candle closes back below resistance, and a sell is signaled, again targeting PP. Each position carries its own structural stop loss and take profit, managed by the engine. The stop is placed beyond the engulfing candle's extreme and, importantly, beyond the hedge trigger, so the hedge always engages before the base stop is reached. That hedge is the signature mechanic. While the base position is open, if price travels a set fraction of the pivot range beyond the level it faded, meaning the level has clearly given way, the strategy opens an opposite breakout position aimed at the next pivot, S2 for a failed support or R2 for a failed resistance. Finally, once both positions are live, the whole basket is closed the moment net floating profit reaches the BasketTpMoney value. Per position stops cap the risk on each leg, which is how the strategy manages that fade then run scenario. Let's look at the actual MQL5 code as it appears in MetaEditor. At the top, we have the input parameters. PivotLookback sets how many closed bars define the floor pivots. Zone fraction controls how close to a pivot the candle's wick must reach. Hedge fraction is the distance beyond a level that confirms it has given way and calls for the hedge. Stop fraction pads the base stop loss, and minimum reward fraction sets the smallest acceptable take-profit distance. Basket take-profit money is the net floating profit at which the whole basket is closed, and we have separate volume settings for the base and hedge positions. Now the long block. The Boolean bull engulf checks that the prior candle was bearish, the current candle bullish, and the current body engulfs the prior one. Touched S confirms the low dipped into the support zone, and closed above S confirms it closed back above S1. When all three are true, the code sets the take profit to the central pivot, places the stop below both the candle low and the hedge trigger, and calls open base for a buy. The short block mirrors it exactly. Bear engulf checks the opposite candle geometry. Touched R and closed below R confirm the rejection at R1, and open base is called for a sell with the stop above the candle high. At the very bottom, you can see the single order line. It calls trade.buy when the side is long, and trade.sell when it's short, each passing the normalized stop loss and take profit. That's the whole entry engine in a handful of lines. Let's bring this to life on the chart. On screen, you can see a sequence of candles, with 3 horizontal reference lines drawn from the floor pivot calculation. The support pivot S1 near the bottom at 1.0810, the central pivot PP in the middle at 1.0850, and the resistance pivot R1 up at 1.0890. Watch how the strategy works the space between them. We begin on the left. The first couple of candles are drifting lower, easing down from the central pivot toward support. There's no setup yet. The strategy is simply waiting and recalculating its pivots on each closed bar. As we reach the third candle, price slides right down into the support zone around S1. This candle is bearish, closing lower, and its low actually pierces slightly below the support line. On its own, that proves nothing. Price often pokes through a level before deciding what to do next. Then comes the key candle. The very next bar opens near the prior close, sells off no further, and instead pushes strongly higher, closing above the open of that previous bearish candle. Its body completely engulfs the body before it, a textbook bullish engulfing. And crucially, it closes back above the support pivot. That's all 3 of the strategy's long conditions satisfied at once. The dip into the support zone, the bullish engulfing pattern, and the close back above the level. You can see the buy entry marker print right there. The reading is straightforward. Sellers tried to push below support, could not hold it, and buyers reclaimed the level the whole market is watching. From there, price does what the strategy is looking for. The following candles step higher, one after another, climbing away from support and back toward the middle of the range. The take profit for this long is the central pivot, and you can see price reach the take profit marker as it arrives at the PP line at 1.0850. The mean reversion scalp has played out, from a reclaimed support back up to the central pivot, and the position closes there. Now watch the second half of the chart, because the strategy works resistance in exactly the mirror image. After taking profit at the central pivot, price keeps pushing higher, candle by candle, up toward the resistance pivot R1. As it arrives, one candle pokes its high into the resistance zone and closes higher, a bullish bar testing the ceiling. Again, on its own that means little. Then the reversal candle appears. The next bar opens slightly above the prior close, but instead of extending the move higher, it turns back down and closes lower, below the open of that prior bullish candle. Its body engulfs the one before it, a bearish engulfing, and it closes back below the resistance pivot. That's the full short setup. The poke into resistance, the bearish engulfing, and the close back below the level. The sell entry marker appears right at that candle. Buyers pushed into resistance, were rejected, and sellers took control at a level everyone can see. From their price rolls over, the next candles work steadily lower, away from resistance, and back toward the center of the range. Just as before, the take profit target is the central pivot, and you can watch price descend into the take profit marker as it touches the PP line. The short has mirrored the long perfectly, faded the resistance pivot, scalped back to the center. And that is the core loop. Fade the first support or resistance on a confirming engulfing candle, and aim for the central pivot. Remember, this is the clean illustration. In live markets, a level sometimes gives way instead of holding, and that's precisely the scenario the hedging mechanic is built to address. This walkthrough is for educational purposes only. That brings us to the end of our breakdown of the Engulfing Pivot Reversal Expert Advisor. We covered how it builds the floor pivot grid from recent price, how it signals long and short reversals when an engulfing candle confirms at the first support or resistance, how its take profit aims at the central pivot, and how its hedging mechanic responds when a level gives way. Everything in this video is educational information only and not financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses do occur. If you found this analysis helpful, please like the video, leave a comment with the strategy you'd like us to break down next, and subscribe for more MetaTrader 5 strategy analyses. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.